Hey everyone, Bleckham here. I get it. Bitcoin. It's this weird, intangible thing. Today we're diving into why it hasn't quite reached dinner table talk status with older generations. We're going to unpack 10 reasons why your grandma might not be rushing to buy Bitcoin anytime soon. Imagine explaining blockchain technology to your grandpa who still writes checks for everything. For many older generations, the language of Bitcoin, blockchain, mining, wallets is utterly foreign. They grew up with brick-and-mortar banks, tangible money, and financial advisors in suits. The digital world, especially cryptocurrency, can feel like an alternate universe. It's not just about the technical jargon, it's the entire concept of a decentralized system. This can be a huge leap for someone who's built their financial understanding on institutions they can physically walk into. For generations, banks have been the bedrock of our financial system. They have provided a sense of security and stability, a place where people could trust their money would be safe. You got your paycheck, deposited it into your bank account, and knew it was safe, insured by the government. This routine has been ingrained in us, a financial habit passed down through the years. So when Bitcoin comes along, preaching a decentralized digital future, it's met with skepticism. It's a new concept that challenges the traditional financial norms we've grown accustomed to. Older generations have weathered economic storms, seen markets crash and recover. They have experienced the volatility of financial markets firsthand, making them cautious about new, untested financial instruments. Bitcoin, with its short history and wild fluctuations, can feel like a risky gamble. Its value can soar one day and plummet the next, creating uncertainty and fear among those who prefer stability. Many older individuals have built relationships with their bankers, their financial advisors. These relationships are based on years of trust and personal interaction, something that Bitcoin and other cryptocurrencies have yet to establish. The challenge for Bitcoin is not just about explaining the technology, but about building trust. Trust that has been earned by traditional banks over decades. Bitcoin must prove that it can offer the same, if not better, security and reliability. Younger generations, however, are more open to embracing this digital revolution. They see the potential for innovation and the benefits of a decentralized financial system. The future of finance may very well lie in bridging the gap between these two perspectives. Let's talk about the elephant in the room, the infamous Bitcoin roller coaster. For older generations who've seen market ups and downs, this kind of volatility can be terrifying. Many older individuals are closer to retirement, relying on their savings to live comfortably. Their investment strategy is often about preservation of capital, not high-risk ventures. Bitcoin's volatility is a major deterrent for those seeking stability and security in their investments. Bridging this gap requires addressing the emotional aspect of investing and providing education. The media loves a good Bitcoin story, often focusing on the negative, hacks, scams, and the dark side of cryptocurrency. Imagine hearing about another Bitcoin exchange getting hacked, millions vanishing. For older generations, these negative headlines solidify their skepticism. It reinforces the idea that cryptocurrency is risky and unregulated. This constant barrage of negativity creates a climate of fear and distrust. The challenge for Bitcoin advocates is to counter these negative narratives with positive stories. Trust in the financial system is built on rules, regulations, and government oversight. These elements create a framework that ensures stability, predictability, and security for investors and the general public alike. Traditional financial systems rely heavily on these structures to maintain order and prevent chaos. Enter Bitcoin, a decentralized currency operating outside the traditional financial system. Unlike traditional currencies, Bitcoin is not issued or regulated by any central authority. Instead, it relies on a technology called blockchain, which is a distributed ledger maintained by a network of computers around the world. There's no central bank, no government agency calling the shots. This means that Bitcoin operates independently of traditional financial institutions, offering a new way to conduct transactions and store value. For some, this is freedom. For others, it's chaos. The absence of a central authority means that users have more control over their own money, but it also means that there is no safety net in place. This duality creates a divide in perception. While some see it as a liberation from traditional financial constraints, Others view it as a step into uncertainty. Imagine explaining to your grandparents that Bitcoin transactions are irreversible. Once a transaction is made, it cannot be undone, which is a stark contrast to traditional banking where errors can often be corrected. This irreversible nature can be daunting for those unfamiliar with the technology. This lack of regulation can be a major source of anxiety. Without the oversight of regulatory bodies, the risk of fraud, theft, and market manipulation increases. Investors must rely on their own due diligence and the integrity of the network. It creates a sense of uncertainty, making Bitcoin feel like a risky bet. The volatility of Bitcoin's value adds to this perception, as prices can swing dramatically in short periods of time, making it a challenging asset to manage. The path forward for Bitcoin lies in finding a balance between its decentralized nature and the need for some level of regulation. Striking this balance could help mitigate risks while preserving the innovative aspects of the technology. As the world continues to navigate this unregulated frontier, the future of Bitcoin will depend on how well it can integrate with existing financial systems while maintaining its core principles. The world of cryptocurrency has attracted its fair share of bad actors. Scams are rampant, from Ponzi schemes to phishing attacks. For those who've built their financial lives on trust, the prevalence of scams in the Bitcoin world is a major red flag. It reinforces the idea that cryptocurrency is risky and unregulated. Addressing this issue requires education, increased regulation, and promoting security best practices. The Bitcoin community needs to be proactive in building a culture of trust and transparency. There's something satisfying about holding a gold coin, knowing it represents a tangible store of value. Contrast that with Bitcoin, a digital currency that exists only as lines of code. Tangible assets like gold have a long history as a hedge against inflation. Bitcoin's long-term value is uncertain, its price subject to wild fluctuations. For those who've witnessed economic crises, this lack of a tangible anchor can be unsettling. Bitcoin advocates need to address this fundamental shift in how we perceive value. Security is paramount, especially for older generations. As technology advances, the gap between those who grew up with it and those who didn't becomes more pronounced. For many seniors, the digital world can seem like a labyrinth of unknowns, filled with potential threats and pitfalls. Imagine explaining the concept of a digital wallet to someone wary of online banking. It's not just about understanding the technology, it's about overcoming a deep-seated fear of the unknown. The idea of storing money in a virtual space without the tangible security of a physical bank can be daunting. Instead of a physical vault, your Bitcoin is stored in a digital environment. This environment, while secure in many ways, is also susceptible to cyber threats. The concept of a virtual vault can be difficult to grasp, especially when the news is filled with stories of digital theft. Headlines about hacks and data breaches reinforce the perception that the online world is dangerous. These stories are not just isolated incidents, they are part of a larger narrative that paints the internet as a risky place, especially for those who are not tech-savvy. If your digital wallet is compromised, your entire Bitcoin fortune could vanish. This fear is not unfounded. Cybercriminals are constantly finding new ways to exploit vulnerabilities, and the consequences can be devastating. For older individuals, the stakes feel even higher because they may not have the technical know-how to recover from such an event. The decentralized nature of Bitcoin means there's no central authority to turn to if something goes wrong. This can be both a strength and a weakness. While decentralization offers security through distributed networks, it also means that there is no single entity responsible for safeguarding your assets. This lack of a safety net can be a major deterrent for older generations. Without a clear point of contact for help, the digital world can feel isolating and unforgiving. It's crucial to bridge this gap by providing education and support, ensuring that everyone can navigate the digital landscape with confidence and security. As we get older, our openness to new experiences and technologies can solidify. This resistance to change comes from experience, from having seen trends come and go. For older generations, the concept of a decentralized digital currency can feel like a radical departure. It's like convincing someone who's driven a stick shift their entire life to switch to an electric car. Bridging this generational divide requires more than just explaining the technical aspects of Bitcoin. It's about highlighting the practical applications and potential benefits. We've been conditioned to seek validation from authority figures, so when it comes to Bitcoin, it's natural to look to trusted sources for reassurance. However, the response from traditional financial institutions has been largely muted. This lack of endorsement creates a vacuum of validation, leaving many older individuals hesitant. For Bitcoin to gain widespread acceptance, it needs to earn the trust and endorsement of traditional finance gatekeepers. This requires education, outreach, and demonstrating the long-term viability of cryptocurrency. So, there you have it. 10 reasons why older generations might be hesitant to embrace Bitcoin. It's complex, volatile, and challenges a lifetime of financial conditioning. By fostering understanding and addressing the root causes of skepticism, we can bridge this generational divide. Thanks for watching. If you found this video insightful, don't forget to like, share, and subscribe for more content like this. This video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Click the link below to check out the book that can help your journey to success.